The Hedgeless Horseman here. It's April the 17th, 2025. Happy Easter, I guess is correct to say, or that it will be Easter soon. I don't know actually when it officially starts. It's a red day in Sweden tomorrow and Monday, at least. Anyway, first of all, thanks to the sponsors. In this video, I thought I would talk a bit about a few exploration stories. And again, like I think I've said before, I don't think. There's been other times where I'm much more heavy, typically into exploration stories, because I don't think simply it's not the risk reward is not best for explorers, given where we are in the subsector valuations, basically, because still birds in the hand are selling for so cheap levels that some are selling basically for around sunk costs, and the MPVs out there might be a billion, or at spot prices, a lot of cases probably like $1.5 to $2 billion, and they might be selling for 100 to 300 million and stuff like that. So basically it's embedded 5 to 10 bagger potential in a lot of de-risked plays, and usually you have to go to the exploration space to get multi-baggers, or you have to bet on the gold price going a lot higher. So when you bought it, and even if it was at fair value at the time, gold has to go up enough that the projects simply are going to become more valuable. And today we are in that weird but fortunate situation where gold has already gone up. It's just that the gold projects have not priced in the value of the gold business right now. So it's kind of in a sense, it's low risk, high reward. But I can't help myself. I do like exploration plays. And what I do think, they're cheap, don't get me wrong. They're pretty much every legit exploration play is cheap. And on some of these stocks, you can basically sneeze at them and they could go up 100% and all that. But still, if we just look at actual risk, like, the risk of not having anything of real value that can get monetized, it's still high risk, right? Pretty much every exploration story is high risk. It's just that, is it high risk or extremely high risk, or relatively low risk, or whatever. But I can't help myself. I want to have fun as well. It's just that those positions are not super heavy. When I think it's really the time to be mostly an alpha, that would be when proven ounces are selling for fair value or overvalued levels. So you don't see any risk reward really buying projects, because the only way you're gonna make money is if the metals go even higher. So that means that's speculation, right? You're betting on the metals going higher. If an ounce in the ground is valued at 100 million or 200 million or whatever, then it would be kind of good if you find some exploration story that could prove up that for less than 100 million or 200 million. Then it's starting to make sense. And if it's tier 1 potential, it could get sold for much more than 100 to 200 million per million of ounce, even though it doesn't feel like it. So I guess what I'm saying is, like, I really I really do think there should be, the exploration stories, they really should have tier 1 potential right now, because that's the only way still to really attract the market, or at least let's say tier 2 to tier 1 potential. Because otherwise, if this shitty sentiment persists, you're kind of, pissing against the wind in a sense. That market won't really care much. They'll keep diluting, and maybe that's actually going to outpace the value creation, and especially if it's actually not amounting to any serious project potential, then you're diluting and raising money for nothing. So it's like I want legit shots because some of them are very cheap still. Market gold, I guess, is down a bit. It was up at 3,360 earlier today. Silver a bit down. Oil up a bit. So just based on today, I guess a slightly lower record margins for gold miners than yesterday. But still, I mean, let's not kid ourselves. This is absolutely absurdly high gold price. That's the fun part, in a sense, that you still see, of course, some gold juniors sell off today because gold is red. And, if they sell off 5%, it's basically signaling that, hey, 5% of all the intrinsic long-term value in this company went away. 5% of it evaporated because gold is down 0.47%, which again is absolutely ridiculous. So, but that's how the markets always are, and it's just, in a sense, it is kind of crazy. I mean, the volatility is sort of the good thing. It's just that everybody hates it. Anyway, okay, nothing there. Revisiting Condor. Condor was my biggest one-day loss in quite some time after the maiden drilling at Pucamayo. When was this? Maybe, I think it was last year or something. That was the biggest pre-discovery position I had, maybe have ever had, especially from a pure monetary standpoint. Maybe I was, even crazier many years back, and went into. The funny thing is, like, if I remember correctly, I think I bet a lot of my then small portfolio on one project company. I don't even remember the name, but they were also looking for high sulfidation epithermal systems, and of course, when I wrote up Condor, for example, that's what I kind of focused on. It's like just the good thing about high sulfidation epithermal systems, they can be very large and very profitable. They can be tier 1 deposits, like, Pierina. And if you happen to find one, you potentially could prove them up with very little drilling. I mean, it's like Pierina, I think, got sold after 9 or 12 holes or something. Sure, they actually did trenching before, so you kind of had more dimensions, but it's like, I mean, the return on investment, or the rate of return on investment was just absolutely crazy. It's like it went from a drill discovery to a tier 1 proven project basically in 10 holes. So compare that to, I mean, almost any other type of project, really. I mean, lode gold, you need a lot of drilling. Low sulfidation epithermal systems, you typically need a lot of drilling, and you're chasing that boiling zone. And again, just, episonal gold, I mean, Foster Wheel and Newfound Gold, they drill like crazy. So that's the beauty of these types of systems. And that's, I mean, somewhat similar to what Snowline did, that after, well, at least 30 holes, you already knew that the Valley deposit was going to be a multi-million ounce deposit. So from a return on investment perspective, and that makes me think about Pierre Lasson's quote. I think he once said 95% of the value creation comes via the drill bit. So that's the beauty, I guess, that you can, I mean, if you found a high sulfidation epithermal deposit, if it's substantial, I mean, you could spend maybe $5 million and prove that it's worth $1 billion, and that you can't say with a lot of other stories. Anyway, so there's been some reshuffling. There's a new CEO in since a while back. Crescat insiders and family, etc., etc. I'm actually planning to participate in this current placement here, and I've kind of been I mean, Peru seems to be quite slow when it comes to permitting, as I'm seeing that in a lot of juniors. I mean, Hannon, for example, is like Previsto Gold is not expected to get drill permits until next year. Obviously, it doesn't change geology or anything like that, but it's yeah, delays basically. But Condor has changed quite a bit as well since I bet huge on it. Pucamayo is left, and especially Pucamayo Southeast, high intermediate sulfuration epithermal, because that's what we already knew back then, that this is a potential district, and they obviously drilled one area of the district where they could drill, but and they didn't get, we didn't get 30 meters or 3 grams per ton and stuff like that, and that's why the stock sold off, because it wasn't that. Everything kind of looked lined up, outcropping mineralization, geophysics lined up with outcropping mineralization, etc., etc. So I thought there was at least a 30% chance that they were gonna hit. Nobody knows what the actual percentage is. It's either there or not, right? So you're either completely wrong or completely right. And that's been, Mother Nature has not changed for millions of years there. So it's either always been there or never been there. But where they actually drilled, we didn't get obvious discovery holes, so it sold off. But they've done more work, and again, it's basically a district. The alteration footprint is huge, so it kind of makes sense that there should be more potential. Then they also have Huinak Punta, where they plan to drill high grade CRD mineralization, basically, what Western Alaska drills and all that. Rio Bravo is a new project. Well, I don't think it's a new project, but they got some data from Valley or something that they didn't have before, and apparently there were a few holes drilled there way back, and it looks like they basically hit copper moly porphyry mineralization with good grades over long widths, which you don't see every day. So they appear to be, available for partnership with strong interest. They already got tech to come into Cobra Orca. I don't know, scale potential, how this stacks up to Cobra Orca, but I would absolutely not be surprised if they get a major involved. So in short, what I see interesting with Condor, I think the market cap is, let's see here, 15 million, but they're doing a raise, Crescat, to participate, so add 1.5 million, I guess, so 17 million CAD, and these are kind of the flagship projects in a sense. I'm probably still most excited about Pucamayo because of the characteristics of high sulfidation epithermal systems. But if they make a discovery, or if Tech drills Tech-sized discovery at Cobra Orca, obviously that's going to be material for this company. If they get a major into Rio Bravo and they make a discovery there, for a large scale discovery, potential for a large scale discovery, obviously material for a junior this size. Even if you keep a small percentage. Then Huinak Punta, fully permitted for drilling already. CRD systems can be very large, very high grade. Obviously, typically, I guess, more drill intensive than a high sulfidation epithermal system, but that goes for almost every project. So, that's what I like from a risk-reward perspective. Again, I bet on a junior that had one project, really, money to drill one target, and pretty much a blind target, and after they missed, that story was over. But as we can see, Condor missed on their first, kinda missed, I guess, on their first Pucamayo campaign of last year, whatever it was. But the story is still alive. They have a major involved in one project, probably going to get a major involved with a second project. They're getting cashed up to do some drilling, and I would not be surprised if they hit some, high grade stuff at Huinac Punta, because they have a lot of surface sample. But I've been waiting to get excited about Condor again. Obviously it didn't feel good to have a 50% haircut from, I bought the stock all the way up to like 55 cents or something, and now it's at 11 cents. Yeah, I think it went up to, yeah. So I bought it all the way up basically, and then did it fall that much even? Yeah, no wonder it was such a big loss. So that really got hammered when they missed. But the expectations were very high. Me included, Quinton, everyone else watching this. And it's like I say before, I can't say that I really regret it. Based on what we knew about the target, and what we know about high self-adhesion epithermal systems, like obviously if they would have hit, my regret would be that I still didn't have enough, right? Because if they hit and they found another Piorina type deposit, this would probably be, well, maybe sold already, perhaps, but it'd probably be trading at 500 million or something, if I had to guess. Because then we would have, 1 year of drilling in a fairly easily drillable blanket target. Probably created a lot of value. That obviously didn't happen. Here's Pukamai on the map here. So this is basically, I think we should have a drill map. So these are the holes, I think. Wait, are these? I don't know if the blue ones are the... I think these are the ones that were drilled. But if we just look at the district map here, this is a pretty large alteration, right? I think they drilled around here. So here you actually have Woogie silica, massive silica showing up, and those are kind of the typical of high sulfidation assemblages, second magmatic intrusive center. So this is basically you obviously can't kill all of this if you drill here, for example. Now this was the obvious place because there was outcropping mineralization. One thing to note though, and this is their schematic. I guess the Geo, famous Geo, has had quite some time to think about and look at the core and figure out what's happened. So basically what they believe they hit was the fingers, let's say, of what I assume is that this would be kind of the main price, and that's the thing. It's like, and I remember this. It's not like they didn't hit anything. Here's like 30 meters, 0.3, 32 grams per ton AU, 36 grams per ton silver, some copper, some lead, AU equivalents of 1.1. So that's obviously not nothing. That's depending on depth, that might be economic, although this is polymetallic. But here, for example, so this is 2 meters of 11, well, okay, this was over here. 2 meters of 11.43 grams per ton AU. So this would be more the finger then, as we can see here. The hole went through like that. 687 grams per ton AG. So this is obviously bonanza stuff, 2 meters of 18. The price is obviously that, these are ridiculously high grades, but that you find high grade mineralization, but over, tens, or I think they have a slide of, So this is Yanacocha, I believe. Yanacocha. Where it's like, okay, 130 meters, 1.2, 160 meters of 2.2, 165, I mean, this is a world-class deposit, right? I mean, this is, yeah, I don't know how, I mean, the total Yanacocha system is, I don't know how many million ounces they've mined there and is still left. 104 meter. So this is basically the goal. And of course, I mean, just looking at this drill map, for example, I mean, sure, you can see that it's kind of, and by the way, here you have this Woogie quartz, which basically is the main host. So there's some complexity, obviously, and this is just, you know, one section line. But you can put together, you know, quite the tonnage on just these 4 holes, even though you won't know exactly that, you know, there's a void here, let's say. But you can prove up huge tonnage, basically, in just a few drill holes, and that's the beauty if you find one of these. And yeah, so the working model, they've already confirmed it's, and as far as I understand, they believe this is, yeah, epithermal type mineralization of high to intermediate sulfidation type, actually, but it's epithermal type mineralization, and they got grades like this. So it's like, obviously there's something here, there's something happening here. I mean, none of these results really fall out of the sky, and it's a very limited drill campaign and all that. So shallow epithermal target Pucamayo southeast. So this is obviously looks like a potential blanket. And here you have mineralized target epithermal and porphyry. Maybe they're telescope. Maybe they're you know, I mean, if they were overprinted, I guess that would be like the best of all worlds in a sense. So I don't think this has been even drilled. And here you have some surface sampling. And these are, I think this is the ledge where they drilled underneath. Right? But who knows? Maybe was some faulting, or for some reasons, like you couldn't really replicate it at depth, not where they drilled. So here you have under new DIA application. This is where they could drill. Was it last year, or maybe they started 2 years ago? Well, let's say last year. So obviously that limits you, because if you can only drill here, you can only drill here. But there's much more potential given the size of the alteration system we're seeing. Wide area of gold in samples, arsenic helpful vectoring gold targets, yada yada. So is there a, you know, potential for a big price here still? Yes, I would absolutely say so. I think that's also why Crescat is getting in, or putting more money into it. I don't believe it's necessary. I mean, I think they believe Pucamayo is the, you know, very much still the flagship project, because of the, I mean, the price if you make one of these discoveries. So yeah, okay, and 2024, I mean, we haven't drilled that yet, so this is, I believe, the planned next holes. Here we get resistivity looking east. I'm wondering, it's like, should you want to have, I mean, high resistivity? I would think that would signify, you know, silica, but maybe this is enough for it to be a target. It's like resistant enough. I mean, it's not purple, as you can see here. So I mean, interestingly, I mean, they're not drilling that far from some of the other holes, Pucamayo 2 and 3. Okay, they don't have, yeah, they have, don't they? Well, here's hole 5. Okay, I don't think that's, can we see hole 5 here? Yeah, this is, okay, so this is hole 5. So they're not necessarily drilling that close to hole 5, even though that had the bonanza. But okay, so maybe, oh, this is where the blankets are, let's say. And of course, with geophysics, I mean, I guess it's one of those things where it's like, yes, it shows up an anomaly, but there's typically always going to be some kind of anomaly. But I think they have pretty good reason for why they would be testing this target now. And with the chargeability, at least, I mean, you obviously see that there's something anomalous there. Why that is, who knows? But that's also the beauty, that if there is a high sulfidation epithermal blanket and it's actually here, and they only clip the edges of it in their previous drilling, well, then we might have a good ending after all. And that's of course not a guarantee. I'm not going to be betting the farm, especially again right now. 1.5 years ago, birds in the hand weren't selling as cheap. So to me, it made more sense. I mean, I was more comfortable going for the risk reward in an exploration story like this. But now we have gold at 3,300 instead of gold at 2,000, right? And some of the advanced explorers, developers have barely moved. So it's simply, I mean, I don't try to predict what the market is going to do necessarily from a valuation standpoint, but I try to, I mean, again, work with opportunities I get to come up with the best risk reward. And then other projects here, they have sampling greater than 100 grams, including Bonanza. Yes, so there's looks like it's a high grade to a Bonanza grade CRD system here, and they're probably gonna hit it, or I wouldn't be surprised if they hit it. That could lead to some flash results, of course. I mean, who wouldn't like a Bonanza type CRD system? Those can go on for, well, it can be mined for a very long time. I think there's even some historic mine nearby or something. Yeah, I think this is well, not even historic. I think this is an operating mine that's mining CRD. Mom and pop kind of operation. But it makes perfect sense. I would guess, to me, this is not the flagship project, even though, hey, I mean, if you prove up a Bonanza CRD system, that's a company maker in itself. Cobrorco, this is the big, I guess, dual porphyry target. Porphyry and skarn, porphyry and skarn. It's like appears that there might be two somewhat intact porphyry system with skarn mineralization right next to each other, and that's obviously big enough for a $30 billion company to want to do some drilling here. So yeah, textbook geophysics, and I mean they're finding the geochemistry at surface, whatever. So you have this skarn shell basically around the porphyry UCU. So we're just waiting for Tech to start drilling this, and obviously, I mean, if since Tech is involved, we know they think it's a non-zero chance this might be a multi-billion-dollar prize. What the actual chance of success is, nobody knows. But I like these stores where it's like you're kind of diversified to the upside, that you have more than one shot and you're kind of only paying for one shot. And that's why I like Inflection Headwater as well. So yeah, I mean, summarizing, at this market cap, I'm willing to take another swing at Pucamayo. I mean, I'm very glad that they have a geologist as good as ever. I mean, I think what Quinton says, like they have an ore finder, or he called him an ore finder. And of course, if you have, Tech get involved with one of your peripheral projects, etc. I mean, it says something about what kind of projects you pick out. It's like when let's say Gary Thompson of Brixton gets shit sometimes because Brixton has not performed well, etc., and the share structure is bloated and all that. I still come back to the fact that, well, say what you will about the share structure and the share price of Brixton. It's like he still have, just in Brixton, he got a project, Hog Heaven, good enough for Robert Friedland and Ivanhoe Electric to farm into or earn into. He got BHP to get in for the Camp Creek project, or the Thorn project, I guess. And he did a deal with, I think it was Eldorado Gold on a gold project. So it's like that says something about the man's, nose for geological potential, if you know what I mean. So I mean, if ever, it's like it would take me a few lifetimes, I guess, to get as good at geology as ever. And yeah, Condor has some. I mean, obviously, I would say projects with world-class potential. So that's about as much as you can know before you actually make a discovery. So I'm getting up on that horse again and look forward to hopefully seeing Pucamayo East and I guess Southeast to get drill tested, because again from a discovery to payoff time frame, this is probably as good as it gets. I mean, Purina again being the best example of that after 9 holes they sold for $1 billion. And of course, I mean, you can do the simple back calculation. Okay, it's at 7 million CAD. Let's say they have money to put in a few holes here. What are the odds that this is that, for example, this where they're planning to drill is a high this is where the high sulfidation blanket is located. We don't know, but if it is there, and if it's good economic, that's probably going to be one brutal revaluation train going, because they could potentially, you could infer several $100 million of value in case of success. So then you look at the market cap again. It's like, what is priced in? Not much. And you can, of course, do it the safer way of like, okay, I'm again putting it on the watch list, waiting for Pucamayo to get or these targets to get drilled. If they make a discovery, then I'll get in. Maybe you have to, well, from this price, you might have to, again, depending on the results, right? Let's say you have to pay up 100 to 200% or something, but now you're actually, now there's suddenly a 30% chance that this is actually a legit company maker potential target. I mean, even if you paid, let's say 40 million CAD for that, if it looks like they could prove up something that's worth $1 billion, that's a pretty good risk reward, especially if you think it's all of a sudden 30%, because then it should be at 300 million, at face value already. So that would be a, whatever, 6-7 bagger just to get to expected value. Just an idea. It's like you do what you're more comfortable with. It's like that's the trade-off, of course. The less the risk it is, the more risk it is, and therefore the potential payoff is larger. But with more information in hand, the risk goes down, or the probability of success goes up, and there's less chance that it won't amount to something. And sure, you pay up for it, but if you don't pay, if there's still upside, I mean, then it might be even better risk reward. And I think they also have some deals with on some of their projects that they are expecting to get some money in as well. So, I mean, blue sky scenario for Condor, and I'm thinking mostly about, I mean, the blue sky is that Tech would make a discovery, they would farm out the Rio Bravo to a major, and that also makes a discovery, yada yada. But if I'm thinking as from Pucamayo, which is 100% owned, if let's say they drill this year, they hit it, it's a significant discovery. They also have money in, let's say, from another project, so there won't be necessarily, let's say they get a few million in for a project. I mean, that might be good enough to prove up, oh, pardon the pun, but like tons of inferred value in that case. So then you don't have this thing where it's like, oh, the it's gonna get capped because the market knows that they blew all their money on this first drill campaign. So everybody who actually likes it is, would like to keep the share price low, let's say, and try to get a cheap financing in because it looks like they're onto a major discovery. That's also one thing that's obviously going to affect and investors, and also really play into the risk reward of the pre-discovery, or playing it pre-discovery. Because otherwise, if you knew that they have no money, I mean, then there's still, after they drill it, then they have still that risk of, well, if they have no money left after they drill these holes, there's a discovery. Again, the market will immediately know they can literally not prove up a single extra, ounce or tonnage, another ton of potential without going to the market again. And then you never know. I mean, some companies, keep going up. There's like, Hannon Metals has really hung in there. It's like, I expect them to cash up one of these days, but it's like, it's the shareholder, it's so tightly held, and I guess there's a lot of people buying in the open market because they think it's that cheap, and maybe they think, well, I might not even get anything in the placement, so they can't afford to wait. So it still goes up. But you have also cases again where it's like Goliath Resources, for example. It's like really good looking system, looks like an amazing discovery. As soon as the last drill hole was out, it's like, they tanked, the market tanked the stock. And of course, that's also a lot of short sellers and traders and whatever. And the fact that the last assays were out. So a lot of stuff going in there. But it's like, that kind of also plays into, it depends on, I guess, how you want to formulate a case. You could make a case for like Condor, I'm buying it today, and I'm looking at the risk reward of holding it for, let's say, 2 years when all 4 projects have been tested, for example. So you could make a case from that perspective. I'm paying 17 million. 2 are going to be free carried by majors, or let's say we believe the second project gets a major. 2 free carried. They have enough to drill and test if they hit something at Huinac Punta and Pucamayo. So it's like, okay, if they find nothing on 100% owned and there's no discovery made over the next 2 years, that's also the trick, right? That if, depending on the drill pace or whatever, and how quickly they can get permits for Cobra Orco, for example, it might be, whoever is drilling, the second project and tech with the first project, let's say they need 2 drill campaigns to make a discovery. It depends on how much leeway you give yourself, right? You can look at it, well, I'm gonna hold for the initial campaign at each one of these, or the next phase of drilling at least, in all of these, or you could throughout the timeline and say, okay, my bet is that I'll give them 3 years. And if they haven't found anything, I paid 17 million, I might still be down to, I might get cut in half or whatever, excluding dilution, or they find something and, something good can have happened. So it's all really a matter, it's like the risk reward, the risk and reward depends on the time horizon, and you kind of have to, I think, find a balance where it's like it makes sense. That's what I said about inflection early on. It's like, I've been in inflection since I think 2021. So in one sense, the bet was that I think they have a good chance of making a discovery if they can drill all these projects, and they've drilled them for quite a few years. Now it's getting more. The momentum is going, since now they have 4 projects in phase 2, and phase 1 was just 10 million to spend across all targets. Now it's 7 million that Anglo's going to spend on each of the 4 projects. So it's really ramping up. But still, it's like one could look at it then because nobody knows if they're gonna make a significant discovery or when. If they would already made one, we would look super smart already, right? If they don't make it in the next news release, these first next holes at Trangy doesn't make a, don't come out with discovery holes. In that case, we're not getting that payoff yet, but we might get it in the next news release. The next set of drilling, for example, or another target might surprise. So the jury is very much still out there for a lot of stories, and that goes for Condor as well. I think I said that way back when. It's like when we got that big share price decline. It's like the story isn't really over because they have a bunch of projects. It's not dead yet. It's like, but it hasn't become a success yet. So for inflection, it's like I don't think the case for inflection. I mean the strength of inflection is that you get so many kicks at the can. But if you're trading inflection for the very next news release, that I'm buying inflection because I think the next news release is going to be a discovery, and if it's not and the stock price goes down 30% for the time being, I'm going to sell. That's not good risk reward really. Right? You can either buy it after they made an actual discovery hole. I mean they've already discovered a porphyry at Trangy, so I mean depends on the definition, I guess. Or again, it's like the only obvious, I would say, risk reward for a store like inflection is like, okay, I know what I'm paying for the company. If it's cheap enough and there's no dilution that's like obviously coming because they're fully funded, and Anglo's going to drill 4 projects. So if I give them 3 years, that might be enough for them to properly test them. It's like either they hit something or not, but at least I get a bunch of shots in from whatever, 30 million market cap or something of finding a company maker. Compare that to buying it at whatever, 20 million or today 30 million and just betting on the next news release. That's not great risk reward in my book. So it's like completely different risk reward case depending on how one plays it and does it make sense. Again, if you have a fully funded multi-project campaign going on, I mean that kind of implies that it's a longer term bet. If you just want to play the next news release, you can play that in any company. Then it doesn't really matter if that Anglo is fully carrying them, right? It doesn't matter how many targets they are because you're just playing the next news release. So you're not playing to inflection strengths in a sense. Now I went off on a tangent, but I think it's important. It's like think, in what time frame, how many news releases, what's the risk reward in what's the sweet spot, let's say. Does it make sense to look at the next news release if there's obviously going to be 20 news releases and each of those 20 news releases can be company makers and the risk is kind of fixed in the sense that if they don't find anything, you're going to kind of have the same result if there was only one news release that showed they don't have anything or 20. But if you get 20, you also get 20 chances of them finding something, which decreases the chance of them not finding something, right? I mean, Condor obviously has more chance of success for investors because they have more projects that could all be discoveries. But in a sense, you also then have to, I mean, if you want 4 shots on 4 different projects, you kind of have to hold through 4 different shots as well. So yeah, I mean, these Condor is kind of a diversified bet to the upside, even though it's high risk. It's like if I knew they were gonna hit that, the first drilling at Pucamayo West, for example. Okay, all of this might be Pucamayo East, but it's like if I knew they were gonna absolutely hit on the last campaign, I would be all in, because it would be like, okay, that's the one of the most obvious bets ever, because again, the growth curve on these discoveries is some of the most extreme in the space, but you didn't know that, and I took a big position and I took a big hit. And right now I simply think that there's exploration stores out there with free exploration upside. So you can't really beat that risk reward, right? I mean, you know what kind of companies I'm talking about without me needing to say it, I think. But that still doesn't mean that, hey, from 7 million market cap company, if they tap into one of these high sulfidation deposits, that could be the best performing stock in the portfolio. And it might not even take that long, because again, how quickly you theoretically can prove up a system like this. But that's not a guarantee, absolutely not a guarantee. Anyway, another one, I'm gonna look at some companies with interesting news recently. So this is Dryden Gold. They announced that they hit a lot of visible gold. This is a shit ton of visible gold. They're basically exploring in an old mining camp, one could say. Here you have like historic mine, historic mine, historic mine. I'm not gonna say I'm almost weary, but it's like, I mean, there's for sure examples of there being a lot left from historic mines, or they did, they only went down to the water table or whatever it might be. And sometimes you kind of worry, like, okay, did they know it was gonna hit like that, and they drill next to something else? Because I'm pretty sure there's a historic hole here, for example, 53,700 grams per ton over 0.55 meters. But that like, I mean, that might have been a one-off, if you know what I mean. So then, if you drill exactly right next to it, I mean, I don't know if this, I don't think this has been mined, which I guess means that whoever was drilling this couldn't find enough to make it into a mineable deposit. Maybe that was just because this was drilled a long time ago, and when you needed even higher grades. I mean, obviously this is economic, but it's like, some stuff around it, maybe, whatever. So that I don't know. I don't know the story well enough, but it did react on this news, as you can see. Opened up at like 13 cents. I mean, kind of went from up 60-70% or something. So obviously exciting. I mean, do you expect this hole to run? Absolutely. I don't know exactly how long this interval of VG is, but like, this doesn't look like that. Maybe it's the other side of it. I don't know. Maybe, I mean, if we're talking like what it could run at half a meter, I wouldn't be surprised to like 1,000 plus or thousands grams per ton gold. But one hole doesn't make a mineable deposit, right? So that's more the question. How much of a is this a game changer in a sense? Or the, potentially it's being drilled very close to where they already knew there was a lot of visible gold. This is I can't exactly see where this was drilled, but you see a lot of historic holes and grab samples and all that. So again, I don't know the story well enough to really comment. Elora Gold System, okay. Where is this from? Elora Gold. So okay, this is the VG hit now. So I mean, if we assume this is also from the same kind of place, then again the question is like, I mean, is this I'm not gonna. I mean, I hope they don't get pissed off. But like, is this a bit of promotional in the sense that hey, we're gonna drill where we did find. Historically there's been super grades confirmed. That's what I don't know. But I mean, there's some really good people involved in this story, and here you have new VG. So maybe, yeah, new VG zone. So it's like, okay, this still at least looks like a, another zone, let's say. Or I'm assuming it's a new zone and just not, yeah, okay, new zone of hanging wall, right? 80 meters from main Elora zone. And I guess the main Elora zone is where you had, well, those really, really fancy visible gold hits with like 53,000 grams per ton over 0.55 meters. Most significant amount of hitting his course gold to the main Elora strikes is very exciting. And I should read up more on, I guess, the Elora zone. I hope you understand what I mean. It's like, because you obviously want tonnage. I mean, you're not gonna find a mine that's being mined at 55,000 ounces of gold, not in a commercial scale. I don't think that's ever existed. I mean, if you were an old timer and just followed one vein for 20 meters, that might make you wealthy beyond your dreams, basically. But in today's, like, I mean, today a mine is like multiple million ounces, all of that. You want long mine life. So I'm saying I don't know. I'm saying maybe it's worth at least looking into, doing some research. I mean, I should be doing some research myself. So I don't know how meaningful this is, because right now it's a lot of VG in a new zone that's been discovered, but it's also in the same area, I think, where it was already known that there was some insane amounts of VG. So is this just a pod? Is it a parallel pod, or is this going to become a new Red Lake type mine? It's like I absolutely don't know. And obviously it's not like it's a very expensive bet, but it is still it's an exploration phase. I don't think they have a mineral resource yet. So yeah, the jury's still out there. For sure looks interesting, and I think again there's some good people involved. I think also they have a major in Centerra Gold, Alamos Gold. So it's not like these are absolute clowns or whatever. No, they have a big land package in Canada, interesting geology. Obviously the next hole is gonna run, that's for sure. But in the big scheme of things, I guess that's the question. It's like, because obviously there's people having bought this because they are thinking it's gonna pop on the assays, and we've seen what can happen when that happens. That it tops at the day of the assay. So it's like it's a everybody gets in thinking they're gonna be selling on the day of the assay results. So you have a bunch of people who already ran up the stock and priced it in kinda, and getting ready to sell on the actual news release. I mean, I saw that in Western Alaska when they put out 80 meters of massive sulfides, or semi-massive to massive sulfides. Then the result came out. What was it? 100 meters or 80 meters of 500 grams per ton AG equivalent, and the stock sold off, and that was the top. Back then at least. Anyway, very interesting. Again, it's like what we I think, I mean, and this is probably some of the hardest things to do, is like, how do you put this into context? I mean, anybody can look at this and see, yeah, of course it's gonna run. But what does it mean for because you can't build a mine on one hit. It's like, what does it mean for Dryden? Is this a exceptional new discovery, and should you be expecting you're going to find 1 million ounces of 10,000 grams per ton? It's like, that's pretty unlikely, right? And again, it's like the context. Well, we already kind of know that there's been hits like this before at the Elora Jubilee mine. So it's like, I mean, how new is this? How significant is this? Maybe it's very significant. I don't know. I don't know. This is on my watch list. I own a small starter position. But I think, again, it's like I have no idea what's going to happen when they release these assays. But we know there's good people involved, third-party validation. So I don't think it's a... I mean, if you, again, going back to the time horizon risk-reward, if you just said to yourself, it's like, okay, I don't know what this is going to amount to. I know what the market cap is today. Let's say I buy some and give it 2 years. If this is the start of something significant, it's probably going to be trading quite a bit higher than 28 million. If not, you know, I mean, just a simple kind of case like that. And in between, it's of course might go up or down 50% at any given point in time. One thing also is like that I wish I looked into it earlier, but it's like Discovery Silver. They used to be the company's Cordero Silver project used to be the flagship project. That's the one which had First Nordic's current CEO Taj Singh. He was at the helm of Discovery Silver when they acquired the Cordero project from Condor Resources, I think it was called. And then built that into I think it peaked at around 700 to 800 million market cap on their silver project, which was, it started off as a very low grade, insane tonnage, like 1 billion tons or something, or 40 grams per ton silver. So it's like the king of optionality plays in a sense. And I remember that went up a lot in, I think it was 2016. Because I bought it because they had the most amount of silver in the ground, and they were trading at like 50 million market cap. That's the funny thing. It's like, okay, same project, more work, find a bit of high grade stuff, better promotion, yada yada, and the same project trades at, not the same project, but project that got worked, and it's one day selling for 700 million instead of 15 million. That's kind of interesting. So they are now helmed by Tony McCooch. Eric Sprott has a very large position, so I assume he got Tony McCooch in it. And the funny thing is, like, they got Tony McCooch in it when they only had the silver project, and Tony's not really, I think, famous for being a open pit silver miner in Mexico. But maybe they had plans in the works already back then, because on January it was announced Discovery announces transformational acquisition of Newmont's Porcupine complex. So they're not buying a mine, they're buying basically 2 camps. Or is it, I guess it's called maybe it's Porcupine and Borden. I think they're getting both of these. So they're getting like 4 assets, or 4 advanced assets. 3 I think are in production actually. This is the expected annual gold production, and then it's it slightly grows, and this is just they're thinking now. You don't know what can happen. It's like they're saying targeting growth in production, mine life through optimization, investment, and exploration success. So this is obviously just a snapshot. There's no way they can tell that it's going to be this entire complex, or all these land packages are going to be producing 93,000 ounces per year in 2047. That's assuming that nothing changes, basically. They don't find any extra ounces. They don't make it more efficient. They don't increase the throughput. They don't buy something else, yada. So I would be more just, I see this more as, again, a base case, because when you go too far out, so much stuff can happen. So it's like the accuracy of the prediction just gets worse and worse. But it's actually quite an interesting story, I think. It's kind of like, Magna Mining, but for gold. And instead of Jason Jessup, you have Tony McCooch, because he's well versed, and his team is well versed with Archean, lode gold mining in Canada. But for sure, I mean, none of these assets. Well, I think one might be unmined. I mean, I don't know if this. I mean, 11 million ounces are inferred. That's a lot of ounces. I guess that's the old. Yeah, might be the old Dome mine. I didn't know. I mean, 11 million ounces just laying there inferred. Maybe that's true, and it's just it's been mined for a long time, but has that still in store. But anyway, so they're basically acquiring a bunch of currently producing mines and a few other deposits. But you can see here, it's like, yeah, so they're down already to like 1 kilometer here, for example, at, I guess this is Borden, and here I don't know what the scale is. I think this is like down to 1.5. So again, kind of reminds you of Magna and, the Levac mine and yada yada, where it's not good enough anymore. I mean, when this was unmined, obviously that would pretty much be a tier 1 deposit, but it's like, okay, it's already been mined, a lot of it has been mined, you're down to whatever this depth is, 1.5 kilometers. Newmont's like, well, this is, I mean, we can't see substantial growth here, and it's getting, the mine life is getting shorter and shorter every day. So we don't want to spend. I mean, we might want to free up resources and manpower, whatever. Pammore also, I guess, I don't know exactly what has been mined here. You see historic underground workings. I guess that's green, but there appears to be deposits that have not been mined yet. And here you have open pit pushback. I guess this has not been mined, but you have a bunch of, again, historic, previous mining here. So it's like none of these assets, I believe, are fresh. But this is the at face value endowment or production profile. Okay, they're at and this is not correct. They actually have double the amount of shares. I thought first it was 1.3 billion. I'm like, oh geez, this actually looks really cheap, but it's actually about twice this market cap. So around, let's say, 2.3 billion dollars. So it's not obviously a micro cap company or anything like that. But hey, it's like, okay, 2.3. I think when I looked into the Newmont's reserves or whatever, or production profile, it's like all in where is that? All in sustaining costs at Porcupine Complex, $1,437. I think they have budgeted at 1,500 in the presentation, if I'm not totally wrong. It's like here, 1,500 ASIC, 285,000 ounces of annual gold production, year 1 to 10, which is in line with the average, I guess, over this period here. So I mean, is it super cheap based on the snapshot view? What if gold goes down? I mean, I actually think, I mean, for a 300, well, soon to be, let's say, 300,000 ounce producer at 2.2 billion in Canada, that's not out of this world expensive, right? I mean, because they have, decent margins, and today they have over 50% margins, ASIC margins. I don't know what Wesdome is producing or what their costs are, but they're around maybe $2 billion. But the thing is, of course, that, hey, this is, all of these assets are, relatively tired. They've already been mined down to 1 kilometer, but they think there's. I don't know if they have any slides here. Yeah, okay. So these are, I guess, exploration targets. And here's a new zone, vein extension. I mean, this is just obviously getting deeper and deeper, so it gets more costly, but it's like if they find something here, obviously that would be a game changer if they can prove that up. I guess this is the exploration, whatever it says here. Potential. So that's the purple. So it's like, is this, can they find another mine that's already been mined? It's like, no, it doesn't, necessarily look like it. Here we got dome, upgrade system, infer mineral to a higher confidence category, establish potential resource classification, yada yada. My point is that, okay, what's the bet here? I mean, obviously, if you like production, they're in production, they make good margins right now. Multi-mine producer, so it's kind of diversified. It's in Canada, which should give a premium. Downside being that most of the deposits are tired. They're not, tier one in terms of costs, and the deeper they go, the cost should be creeping up. But they're gonna do. Tony McCooch is gonna try to optimize things, and of course do extra, exploration. And here you have on-property targets, off-property targets. So, could they be mining here for quite some time? Might you be buying, let's say, this production? I think they talked about, they're aiming at getting to 500,000 ounces per year of production, and that's not obviously showing up here. So let's say they do get that and can keep mining for quite some time. Who knows? And maybe they'll do some acquisitions. This is the thing. It's kind of, I think, the same with Magna. It's like you're betting on the people in a sense. You're betting on their vision. I don't know what they can make more efficient. I don't know how they exactly can reduce costs. I bet Tony and the team knows how one goes about reducing costs. And maybe there's acquisitions in the area that they're looking at. That's on that note. Amex was mentioned in a recent interview. I think it was Don Durrett and what's his name? I know, from CEO.co. It's like, he said Amex lies between, well, it's near both El Dorado and now Discovery Silver. And they have a unmined 1.6 million ounce deposit that's probably gonna get bigger. So that's the beauty of, that's why I actually kind of like, even though underground mines are, can be very tricky and difficult, especially in some places. Just look at some Red Lake deposits. They also have the potential to be starting off with like 1 million ounces and then just keep going and keep going and keep going. So you'll be mining here, 30 years later. And that you didn't pay for. So it's like you paid for maybe you might have bought this on the cheap. And there's what today's gold price. For Amex, for example, the payback would be like 1 year. So then you're free rolling. And after you're free rolling on the current deposit, you're also free rolling all other future cash flow, So maybe there's more consolidation to be made, but I'm thinking of getting Discovery. I'm not too happy buying after it has run like this. I wish I looked into it, as I think the deal was announced back here. Of course, gold is up quite a bit, so that's one thing to take to note, that, well, gold might be up $300-400. So the production is worth more today. But I obviously would have liked to figure this out before taking a look at it. because whatever it was trading at here, so that's almost half. So maybe it was at 1.3 billion. All of a sudden, it's like, yeah, that's a no-brainer. So I mean, that's what I get pissed off when I actually don't like. I didn't even really take a look on the at the deal. And now it's like, okay, now if I want to get in, it's not like, yeah, I mean, this is what I kind of missed out on. But with that said, yes, gold is a lot higher as well. So it's not like the ones who bought here knew that gold was going to go up here. So now I'm buying higher, margin of safety in a sense. At least margin of safety. Yeah, margin of safety on the ounces being produced. But I'm thinking of actually, taking some of this and maybe putting it into the HODL folio. It's like, do I expect to get a 10 bagger in Discovery Silver? No, not really. Or they're gonna be renaming as well. Not really, but it's like, just from the management perspective, like I assume Tony McCooch can, if he can get the production up to 500,000 per ounce, that's got to be worth something. I mean, that could be worth a double, I would think. And when he's doing that, maybe they've made some more discoveries. All of a sudden, it's like fast forward a year or two, even at today's gold price. You're looking at a company that's closing in on at least a pathway to like 400,000 or 500,000 ounces per year with maybe lower cost, and they've shown that there's, they've discovered some additional zones or something, and maybe they made another acquisition of some kind. So stuff like that, because this is really, I think, the time of consolidation. Because like if I were them, I mean, or Eldorado, whatever, it's like, why wouldn't you buy Amex, for example? You're getting 1 to 1.6 million ounces high grade gold, very cheap, payback in 1 year basically. High margin as well, so it's not like, oh, if gold falls $500, you're not gonna have a good payback or anything like that. So actually quite interesting. I must say, it's like that's the problem sometimes. It's like it's one of the biggest problems for a lot of people, I think, including myself, is that we tend to be too greedy. I don't know how many times you buy some high risk store, let's say, because you're thinking that, hey man, this could go up 5x or something in a year, and at the same time you don't buy some of the, like, I mean, maybe this is not absurdly cheap, but similar type stories, where it's like, I mean, people call like Montage Gold expensive, for example, and that's been making new all-time highs. I mean, that's been outperforming a lot of stuff, but it's not like they made a new discovery in a sense. No, they're just getting closer to production and gold prices up. They've done some wheelings and dealings, actually, I mean, into Sanyo Gold and stuff. But my point is that some of these kind of low risk, decent upside bets, I think a lot of people don't think it's enough, especially if you're down and you're chasing losses. Then you don't want, I mean, you wouldn't buy Newmont because you couldn't get a double in Newmont in 2 years, right? Not if you're down 70%. Then you kind of go out the risk curve because you have more to make back. But if you're, way ahead or something, you might like, I mean, that's how it is in poker. When you're down in poker, you could almost play 24 hours straight, just chasing that loss. And usually you take bigger risks, which usually is why people go bust. But when you're ahead, it's very stressful because you don't want to lose that money. You're very happy about the fact that it was a winning session. Maybe you have a winning session 2 out of 3, or half the sessions are winning, whatever. So it just feels so good when you made money that you start to play really tight because you're afraid to lose it. But some of these stories, I think, where it's like, yeah, hey, I can see some upside, and you're betting on management, and it's like, they're not gonna F it up. It's like with Magna, you're betting on those guys being the best decision makers you could ask for. So you're gonna just constantly probably gonna do the best decision possible. month in, month out, year in, year out. And that's going to be showing in the future value of the company. So that's, I think, what this kind of is, that this snapshot here, I'm not going to say it's misleading. They have to put it in, I guess, because that's like right now, by given the PEAs or whatever, that's how it looks. But at the same time, it's like what you're actually, I think, buying, the upside is going to come from what the management can do, if you know what I mean. So you're not actually buying this here. You're getting this as some kind of a base case, and the actual, outperformance, let's say, that's because this might not go like this, it might go like that, and stay up here, maybe another acquisition, and yada yada. So it's actually gonna go like that instead of like this. But if it's priced for this being true, maybe it's not cheap, or fairly valued. But you think that, well, the management team is going to have the curve go like that, and if that happens, I mean, now we're way years out here, of course, so that's maybe too much to ask for, that you have a 10-year case. But anyway, I thought it was a good case to bring up, because again, it's like most of the money we lose is obviously chasing the highest potential plays. Whereas like a lot of the time, well, especially now, I guess, there's a lot of like medium to low risk plays with good upside, but we're too greedy to actually buy them. And honestly, if what's the bet here? It's like, well, Sprott and Eric, they're obviously close. Tony's a good operator. He's done this before. You're kind of betting that you could make a bet that I'm going to buy this today, hold it for 5 years. Hopefully Tony will have made some good decisions, because he would probably be the one to make good decisions. Maybe I'm actually not. How long am I on time? Oh, I'm already at 1 hour and 60 minutes. Okay, I'm not gonna. I thought about going through a few more cases, but yeah, I mean, this is, as I like to call, investing is an art, not a science. How do you account for management's value creation? I mean, if you have, let's say, Tony McCooch and his team owning this relative to some other team, the future returns might be vastly different. And if you have a shit team that owns all of this, you might lose money. But if you have Tony, you might make a lot of money. So that doesn't obviously show up in an MPV or anything like that. But when you think about it, it's kind of a simple case in the sense. It's like, okay, if this is somewhat cheap or fairly valued now, just based on what is known, how cheap could it be? Because this is after-tax free cash flow. So it's assuming here, for example, $2,576 per ounce, and going lower, and beyond 2,150. So here it's assuming $2,150 per ounce and all that. I mean, today it's $800 higher almost. So I mean, that's quite a step up. It's like 80% more margins, for example. After tax, pre-tax cash flow. So does that make 2.2 billion look super cheap, even if we had today's gold prices? I don't know, But then again, add the Tony McCooch thing, and add that gold can still go higher, and all that. And one thing that I actually think is the real kicker, that might be easy to forget, because again, the market can only really focus on one thing at any one time. The real kicker, in a sense, is the fact that these guys still have the project they traded not too long ago for 300-400 million, which is the Cordero project. So this is one of the largest silver projects in the world. So in a sense, one could look at it, if we're talking optionality, which Pierre Lassonde likes to talk about, he's saying it's not priced in by the market, and that's why he made so much money in the royalty business. I mean, one could look at it like, okay, maybe I'm buying the gold assets at kind of fair value, as is. I mean, I think even they had a MPV here. Here. So after tax base case, MPV, analyst consensus, whatever that is. Okay, it does not include 11 million ounces of inferred resources at Dome. If that is good or bad, I don't know, but that's in a sense an 11 million ounces option. This is the long-term price of, okay, I don't know. Oh, what is the, okay. I don't know, it still doesn't say what the base case is here. Is this USD or? I don't know if this is USD or not. I mean, this is obviously US ASIC margin. Maybe this is US dollars. So at 2,650, which is, I mean, yeah, that's a $700 below spot. It's a 2.3 billion. Maybe that's even 2.3 billion of USD. So let's say around 3 billion CAD. Well, at spot, it's undervalued in that case. And that's not accounting for the 11 million ounces of inferred, and it's not accounting for the discovery, the Cordero deposit, and it's not accounting for management's expertise, management's value creating skills. So then one could, I guess, look at it like, okay, I'm buying the gold assets a bit less than fair value at spot price. Yes, gold is up a lot, of course. If gold goes down, you might have overpaid today. But at least it's like gold might also go up, and I'm not overpaying. So in a sense, okay, I'm okay with, let's say, paying fair value or close to, well, actually less than fair value at spot gold, but I get 11 million ounces of 11 million ounces of inferred Dome as free. I get all the exploration potential for free. I get the management's value creation skills for free, including any acquisitions, whatever. And I also get one of the largest silver projects in the world for free, which if silver would go to $50 or whatever, or even higher than that, and they were to put it into production and could finance it kind of organically, yes, then the picture might be, where is it? Then the picture might be like, hey, in 2029 they're going to be producing 500,000 ounces of gold from Canada. They're going to be producing 45 million ounces of AG equivalent from Mexico at a time when silver might be at $50 to $100 or something. And they've added even more value in the meantime. And maybe that 11 million ounces of gold in the inferred is on the way to becoming a mine, for example. So that's the stuff. Then then it's kind of getting interesting, because then you're getting free upside, optionality upside. So it's like, I mean, there's, again, if you just look, that's the beauty. That's what, I mean, our job kind of is to appreciate what the market might not be appreciating, but will appreciate one day. Which that if the market doesn't believe that this production is going to go up, if it just buys this chart here and you're thinking there, well, this is not accounting for the Cordero project in Mexico, this is not accounting for the management value creation skills, this is not accounting for the dome deposit. This is not accounting for exploration upside, and some might be, who knows, probable. I don't know the assets well enough to comment. Then there's a bunch of, in a sense, risk-free upside. All of a sudden, then you know, the case kind of looks, whoa, I mean, yeah, I can really see how it could make some money in this. Anyway, I think it's a good example, and as always, I mean, I'm not after accuracy. I want, you know, good risk rewards. I mean, some cases actually, like, you know, Magna, for example, it's like that's the one defining thing. It's like, what is the greatest asset in Magna? That is the management team. How do I get the value out of the biggest asset being the management team? That's basically time held. The longer I have own a stock with a value creating management team, the more value will have been created, the more I should be making. I should be up. The value of the company should be higher in 1 year from today. It should be even higher 2 years from today, 3 years from today, 4 years from today, excluding, you know, metal price variations and all that, or another, you know, other external factors. That makes a case pretty simple. It's like, I have absolutely no target price on Magna, for example. I just think they have a lot of tools in their toolbox. They have a lot of cars to work on. And I think the cars are gonna, you know, look better in the future than they are now. Anyway, thanks for listening. Consider me biased. I might own shares of companies I mentioned. I don't own any shares of this actually yet. I think I own a few Dryden. I don't think none are banner sponsors, but anyway, biased. Thanks for not investing advice. Do your own due diligence. This is not a buy or sell recommendation, etc., etc. Thanks for listening. Bye.